Assalamualaikum warahmatullahi wabarakatuh. Hi everyone, I'm here to share the result of my assignment. Before starting the presentation, I will first introduce myself. My name is Tria Dewi Fadhilah Manopo and I'm from accounting major in Gorontalo State University. And here I will present the result of my assignment regarding the fixed asset case given by my lecturer, Mrs. Justina Hiola, S.A. AK MSA CA. Here is the first question. So an Acer branded computer was purchased for 7,500,000 rupees with 10% cash discount. The cost incurred to install the computer and installation until it is ready for use amount to 250 million rupees. Calculate the cost of acquisition and make a journal entry. And here is the answer. So the purchase price of an Acer computer is 7,500,000 rupees minus with a 10% cash discount. Cash discount is 10% multiplied 7,500,000 equal to 750,000 rupees. And then the price after case discount 7,500,000 rupees minus 750,000 rupees equals 6,750,000 rupees. And computer installation and installation cost is 250,000 rupees. And then the formula of acquisition price is purchase price minus cash discount, where the price after cash discount, and then plus computer installation and installation cost. So 6,750,000 rupees plus 250,000 equals 7 million. So the journal entry is debit computer and in credit cash. So the second question is purchase soybean processing plant machinery 55 million. Expense related to the purchase of machinery include VAT or value added tax amounting to 5,500,000 rupees, insurance premium 550,000 rupees, and installation cost is 1,450,000 rupees. Calculate the cost of acquisition and make a journal entry. The answer is that we know purchase price of soybean processing plant machinery is 55 million, and VAT or value added tax is 5,500,000 rupees, insurance premium 550,000, installation cost is 1,450,000 rupees. And the formula of acquisition price is purchase price plus VAT or value added tax plus insurance premium plus installation cost acquisition price. And the result is 62,500,000 rupees. And here is the journal entry is in debit. There is factory machinery as asset and credit cash. The amount is 62,500,000 rupees. The next is PT Channel purchase factory equipment at a cash price of 120 million. Advance payment was made of 20 million and the balance was paid with interest-bearing notes with a term of 1 year at 10% interest. Create a journal to record the purchase of asset and a journal at maturity. And the answer is that we know purchase price of factory equipment is 120 million, advance payment given 20 million, and the formula of remaining payment by money order is purchase price minus down payment, that 120 million minus 20 million, the result is 100 million. And notes interest for 1 year is 10% multiplied 100 million equals 10 million. So the journal to record the purchase of asset in debit, factory equipment as asset, and cash and credit as cash. And the amount is 120 million. And journal at maturity 1 year after purchase in debit, there is notes as liability, and credit is interest payable. The amount is 100 million. The next question is PT Raus on January 1, 2023 purchase land, building and equipment for total of with a total price 100 million and their respective market price of 45 million for the land, 75 million for the building, and 30 billion for the equipment. Calculate the allocation of the acquisition cost of each asset and make the journal entry. Okay, and the answer is total purchase price is 100 million and market price of each asset: land 45 million, buildings 75 million, equipment 30 million. So the total market price is 150 million. And the allocation of acquisition price, the formula is land market price and total market price multiplied total purchase price. The land is the result 30 million, the building the result is 50 million, and equipment the result is 20 million. So the journal to record the purchase of asset in debit, there is land as asset 30 million, building as asset 50 million, and equipment as asset 20 million. And in credit cash there is 100 million. Next is on January 27, 2023, PT Alivia received a donation from the local government in the form of land. Donation in the form of land, the fair value of the land in the local location is 75 million. Make the necessary journal entry. So PT Alivia received a donation from the local government in the form of land with a fair value at the local location of 75 million. So the journal to record the land donation is in debit, there is land as asset, and credit as donation income. The amount is 75 million. So the next question is, on April 1, 2022, a vehicle was purchased in cash for 30 million. The cost of title transfer insurance edge was 1,800,000 rupees, and the cost of loading and unloading was 600,000 rupees. Make the journal entry. The answer is that was a vehicle was purchased for cash was 30 million. Other costs associated with the purchase of the vehicle were title transfer fee of 1,800,000 rupees. Loading and unloading cost was 600,000 rupees. The journal to record the purchase of the vehicle and related costs, there is debit, vehicle as asset, the amount is 30 million, and in debit, title transfer fee, the amount is 1,800,000 rupees, and in debit, unloading fee, the amount is 600,000 rupees. And in credit, there is cash. The amount is 32,400,000 rupees. The next question is, on April 1, 2022, a machine was purchased in 60 monthly installments of 500,000 rupees. The cash price of the machine is 24 million. Prepare a journal to record the purchase on credit or installment and journal each installment payment. So the answer is that we know the machine is purchased in 60 monthly installment of 500,000 and the cash price of the machine is 24 million. So the journal to record purchase on credit or installments. In debit, there is machine as asset. The amount is 24 million, and in credit, there is machine payable. The amount is 24 million. And journal each installment payment, for example, every month. In the debit, machine payable, and in credit, there is cash. The amount is 500,000 rupees. The next question is, PT Samsung exchanged a building for 100 shares of common stock with a nominal value of 1 million. At the time of exchange, the market price per share was 1,100,000 rupees. Make a general journal entry. So the common stock is 100 shares multiplied 1 million. The result is 1 billion. And the building is 100 shares multiplied 1,100,000 rupees equals 1,100,000,000 rupees. So the general journal to record the exchange of building for shares. In debit, there is common stock, and in credit, there is building. Question is, a machine with an acquisition cost of 20 million has been depreciated by 12 million. On March 15, 2022, the machine was exchanged for a new machine worth 30 million. In the exchange, the old machine was valued at 6 million. Calculate the residual value of the old machine asset and the gain or loss on the asset exchange and make an appropriate journal entry. We know the acquisition price of the machine is 20 million and accumulated depreciation of the machine is 12 million. So the book value of the machine, the formula is acquisition price minus accumulated depreciation. The result is 8 million. And we know on March 15, 2022, the old machine was exchanged for a new machine worth 30 million. The old machine is valued at 6 million. So the residual value of old machine asset is the book value of machine minus sales price of old machine. That 8 million minus 6 million, the result is 2 million. And profit loss on assets exchange equals acquisition price of new machine minus residual value of old machine. The result is 28 million. The journal to record asset exchange. In debit is new machine as asset. The amount is 30 million. And in credit there is old machine as asset. The amount is 6 million. And in credit, profit or loss on asset exchange, the amount is 28 million. Okay, and the last question is, PT Kereta Api Indonesia decide to build its own branch office building in Malang. The cost incurred include raw material cost of 200 million and labor cost of 150 million and other costs of 100 million. Make a journal entry for the transactions. So that we know, PT Kereta Api Indonesia decided to build a corporate office building in Malang with the following costs. There is raw material cost is 200 million, the labor cost is 150 million, and the other cost is 100 million. So the journal to record this cost is in debit. There is raw material cost, the amount is 200 million, labor cost, the amount is 150 million, and other cost is 100 million. And in credit cash, the amount is 450 million. That's all my presentation today. Sorry for the mistakes. And wassalamualaikum warahmatullahi wabarakatuh.